Indeed. Woo. Well, welcome to you all, and good evening, and welcome to this evening's Ralph Miliband lecture in the series on the future of capitalism, and sponsored by a new LSE initiative, a new journal called Global Policy. I'll just say something briefly about global policy before introducing our guest, who, of course, needs little introduction from me. Global Policy is a major new LSE initiative, a new journal focused on the major global issues of our time, bringing together academics and practitioners. Joseph Stiglitz is on the advisory board of Global Policy, and we thank him very much. If you're interested in knowing more about this new LSE journal, take a look at one word, globalpolicyjournal.com, and be wowed. And here's the first issue, which I present to Joe now. That was the warm-up business. Now for the main story. Joe is, of course, well known as a Nobel Prize-winning economist. He won the Nobel Prize in 2001. He has made fundamental contributions to many, if not most, if not all, the subfields of economics. He has taught at many universities across the world, including, I'll just mention, Yale, Princeton, Stanford, and Oxford. Since 2001, he's taught at Columbia, where he's the university professor and chair of the Committee on Global Thought. He's also, of course, held a number of very influential positions, and what makes him so unique is his movement between academia and practical engagement. He served as President Clinton's chairman of the Council of Economic Advisors from 1995 to 97. At the World Bank, of course, served as vice president and chief economist from 1997 to 2000. Shortly after, in 2001, he founded the IPD, the Initiative for Policy Dialogue, a think tank on international development based at Columbia. And in 2009, I'm jumping for time, he was appointed by the President of the United Nations General Assembly as the chair of the Commission of Experts on the Reform of the International Financial and Monetary System. He is, of course, a world-renowned author. His book, Globalization and Its Discontents, has been translated into 35 languages and has sold more than 1 million copies. Other well-known books to most of you include The Roaring '90s, Making Globalization Work, you might want to revise the title now, $3 Million War, The True Cost of the Iraq Conflict. Today's lecture celebrates the launch. It's an extraordinary thing. This man is unbelievably prolific. The launch of another book, Freefall, which is here. And it's called Freefall, Free Markets and the Sinking of the Global Economy. Joe Stiglitz is going to speak on this theme of his new book for about 40 minutes. Then we have roaming mics, and I'll take questions from you all. And then the book is available for sale right after this event, where Joe will sit and sign these copies of this book in the dress circle and the bar area of the Peacock Theatre. So let me and ask you again to welcome Joe here again this evening. He's been to the LSE before, but the fact that you all clap before he says a word says something about this man's contribution to public life, intellectual development, and critical economic thought. So we welcome you greatly.
Well, thank you very much for that introduction. The last few years have been, last couple of years have been a wonderful period for economists. As most of you may know, economics is called the dismal science, and economists have had a field day because things have really been very dismal. And unfortunately, they're likely to remain that way for some time. Economists, like good doctors, like a very sick patient. The sicker the patient, the better, because it gives us insight into pathology. When things don't work, gives you insight into the way things should work. And the economy right now is, in many ways, remains in sick condition. It's particularly, welcome this opportunity to talk at LSE because one of the important consequences of this crisis is to make us rethink our ideas about economics, about how economies work. And one of the points I'm going to try to argue a little bit later is that, in fact, the failure of the economics profession was an important, plays an important role in understanding the current crisis. Before going into a discussion of the causes and some of the consequences and what to do about the current crisis, I want to spend a few minutes just reviewing how bad the situation is. Take a little bit of an American-centric approach. Very natural to begin with the United States because this is a crisis that has a Made in USA label on it. We exported the crisis around the world. We actually exported a lot of our toxic mortgages and to Europe, and we sent a big thank you note for buying all of so many of our toxic mortgages. About 40% of them were bought in Europe. In many parts of the world, we exported our deregulatory philosophy, but I think here in England, you came about that idea on your own. And some people think you may have actually had some influence back on us. But in any case, this has now become a global crisis. As I say, let me just spend a minute talking about how bad things are and why I'm not very optimistic that it will be over very quickly. It's natural to begin with the labor market because even though growth has resumed the last 2 quarters, there has been some growth, unemployment remains very high. The official statistics are just now under 10% unemployment, but if you look at a broader measure, which includes discouraged workers, if you're not looking for a job because you can't find a job and you've looked for it for more than, for months and you can't find one, you're not called unemployed in the United States or in most other countries. But if you look at a broader measure of people who want a full-time job and can't get it, 1 out of 5 Americans now who want a full-time job can't get one, which is an amazing statistic. If you look under specific demographic groups, the unemployment, even the official unemployment rate has gotten very high. Among working age males as a whole, the official unemployment rate, not the unofficial one that, as I said, is much larger than that. The official unemployment rate is now close to 20% for males of working age. For Afro-American youth in the United States, the official unemployment rate is close to 1 out of 2. So when you look at the labor market, it is in a disaster. We are now beginning to experience something that happened in Europe in the 80s, a phenomenon that goes by the name of hysteresis, that we are having increasing numbers of long-term unemployed. And the problem with long-term unemployed is that the longer you're unemployed, you use up your savings and you lose your job skills. And the likelihood, therefore, that you will not get another job or not get a good job increases the longer you're unemployed. And right now, more than 4 out of 10 Americans who are unemployed have been unemployed for 6 months or more. So again, it's really a sign of a very sick labor market, particularly unusual in the United States, which has been characterized by very fast turnover of labor of the unemployed. The housing market is also in a disastrous situation. It was in housing that the problems began, but they're actually getting worse, not better. We expect in 2010 between 2.5 and 3.5 million Americans will lose their homes. And with that, many of them will lose their entire life savings. That's more than in 2009, where it was about 2 million, and in 2008, when it was almost 2 million. So we have now a growing problem of a social problem as well as an economic problem. And just as a digression, it shows an aspect of the dysfunctional nature of our markets right now, because at the same time that we have large numbers of vacant homes, we also have large numbers of homeless. Standard market economics is that demand is supposed to equal supply, and yet we have the situation of a mixture of homelessness and vacant homes. An important interaction between this problem of unemployment and the labor market is that there's about to be, at least some people worry there's about to be, a major change in our labor market. One of the characteristics that has defined America's labor market is it's a national labor market with a high degree of mobility. But that mobility requires people moving from the West Coast to East Coast, all over the country. But when they move, they sell their home and buy another home. But they can't do that anymore, because right now, more than 1 out of 4 Americans who have a mortgage owe more on their house than the value of their home. Their equity is negative. And even those who have positive equity have that's diminished, because house prices have come down almost a third from the peak. The implication of this is, of course, not only is the labor market going to be having more problems, but it's almost inevitable that the problem of foreclosures is going to continue. The financial system right now seems to be in repair, but it's not doing what it's supposed to be doing, which is lending. In fact, credit is being constrained. And again, there's an interplay between the real estate market and what is going on. Small businesses, which are really the source of job creation, are finding it increasingly difficult to get loans, because much of their lending is what is called collateral-based loans, which means they use their real estate as collateral, but with the real estate prices coming down, their access to loans is being diminished. And in that sense, these problems seem to be increasing, not diminishing. But meanwhile, the financial markets are facing some very big bumps in the road. Commercial real estate, not gotten a lot of attention, is almost in the same situation that, or in some people think in a worse situation than the residential mortgage market. About $500 billion of commercial real estates are coming due each year in the next 5 years, and many of them are also underwater. That is to say, the value of the property is less than the loan. The first of these problems manifested itself about 2 weeks ago with one of the largest bankruptcies that we faced, and that's likely to continue. It is true that the banks are reporting profits, but as I jokingly say, if you could borrow from the Fed at a zero interest rate billions of dollars, you too could make billions of dollars. It doesn't take a genius to take money from the Fed and buy a zero interest rate and buy, say, a government T-bill earning a lot higher. So it's not genius that is generating the profits. Very little of the profits are coming actually from lending. They're from other areas of activity, speculating and this kind of arbitrage of borrowing low from the government close to zero interest rate and lending. So the prospects of a sound recovery of the banking system, that the banks will return soon to doing what they're supposed to do, lending, is fairly bleak. So this is what I've tried to do is to share with you some